What if your photography business could stay profitable year-round, even when bookings slow down? Most photographers assume the problem is marketing or demand. Hey, I'm Tom Haberman, author of the 7-Figure Photography Business Secrets and founder of Tom's World Collection, One Headshot, and Tom's Visuals. Without a real business plan, even a busy photography business becomes fragile. You buy a camera, shoot some sessions, post on Instagram, and hope bookings roll in. When income stays unpredictable, you assume you need better marketing or a bigger following. The actual problem is simpler. You never build a foundation. Pricing barely covers costs. Cash dries up in the off-season. It's simply a structural problem. A photography business plan is not a document to impress a bank. It's the structural thinking that tells you what to charge, what to target, how much you need to earn, and what happens when cash gets tight in January. Only 33% of small businesses have a formal business plan, yet those that do grow 30% faster. This is episode 1 of a 5-part series on building a photography business plan that actually works. Today I'm giving you the complete overview, the roadmap. We'll touch on every major section, why each one matters, and what happens when photographers skip these steps. Here's what's coming. Episode 2 covers how to use a photography business plan template without making it generic. Episode 3 explains what a business plan actually is and why it prevents the 2 most common failure modes. Episode 4 breaks down the most damaging mistakes photographers make when planning. Episode 5 shows you how to write an executive summary that investors or lenders actually read. By the end of this series, you have a working document that guides your decisions, not just a file that sits in a folder. A photography business plan is a written document that defines how your photography business will operate, generate revenue, and stay solvent. Not a vision board, not a list of goals. A structured analysis of your market services, costs, and financial projections. A complete business plan covers 7 core sections: executive summary, company overview, products and services, market analysis, marketing strategy, operations plan, and financial plan. Each answers a specific question about how your business will function. Entrepreneurs who write formal business plans are 16% more likely to achieve viability than those who don't. For photographers specifically, the business plan prevents the most common failure mode, undercharging. Undercharging leads to cash shortages, seasonal stress, and business collapse. Before you write a business plan, decide what kind of photography business you are building. This is less about what you enjoy shooting and more about what the market will pay for, what your local area supports, and what work schedule you want. The global photographic services market was valued at $46.4 billion in 2024. Your job is to find the segment where your skills, market, and financial goals align. Wedding photography offers high per-client revenue. The average cost of a wedding photographer in the US was $2,900 in 2024, but it requires significant time investment and has strong seasonal concentration. Portrait photography packages typically range from $300 to $800 per session, with faster turnaround and more repeat business potential. Commercial photography day rates typically range from $1,000 to $3,000 with more consistent year-round demand. Each niche has a different revenue model, client relationship, and demand cycle. Your market research needs to identify which one aligns with your capacity and market reality. Market research for photographers is practical intelligence gathering. How many photographers in your area serve your target niche? What are they charging? What do their reviews say about client expectations? What are the gaps in service quality or availability? 48% of professional photographers report that local competition is their biggest business challenge, which means differentiation matters more than general skill. Your market research should identify what competitors do well and where they leave clients underserved. Once you understand your market, you need to write an executive summary. This is the first section of your business plan, but you write it last. It's a 1-page overview that summarizes everything: your business, market, services, and financial projections. If you are seeking financing, this section determines whether anyone reads the rest. Investors spend an average of 3 minutes and 44 seconds reading a pitch deck or summary. Your financial highlights must be visible immediately. An effective executive summary covers 5 elements in roughly 1 page: mission statement, company history, products and services, financial summary, and market analysis highlights. This is not the place for philosophy or brand storytelling. It's a factual summary that lets a reader understand your business in under 5 minutes. Your mission statement needs to be specific. Niche-specific businesses see 20% higher customer retention rates than generalist operations. Wedding and portrait photography is less compelling than luxury wedding photography for couples, let's say, in the Los Angeles market. The specific version tells a reader your niche, price positioning, geographic focus, and deliverables. Legal structure affects your taxes, liability, and credibility with clients. Get it right before you book your first paying client. 73% of all US businesses are sole proprietorships, the default structure if you do nothing. But they offer zero liability protection for personal assets. An LLC prevents personal assets like your home and car from being seized to pay business debts or legal settlements. If a client trips over your light stand and sues, you want that lawsuit aimed at your business, not your personal savings. S-Corp status can save self-employment taxes on the distribution portion of income, but it requires reasonable salary payroll processing. This typically makes sense once you are earning $60,000 or more in profit. Below that, the administrative complexity usually isn't worth the tax savings. Registration requirements and costs vary significantly by state, ranging from $40 in Kentucky to an $800 annual tax in California. Research your specific state requirements before budgeting. Most photographers need fewer permits than they expect, but the ones you need are non-negotiable. Business license, home occupation permit if you operate from home, sales tax permit if you sell physical or digital products, and special use permits for commercial photography on public lands. Your services and pricing strategy is where the business plan becomes operational. Define what you sell, how much you charge, and why those numbers work. List every service you could offer, then narrow down to your core offerings. Trying to do everything dilutes your positioning and complicates operations. Photographers offering printed products like albums and wall art average 28% higher revenue per client than digital-only shooters. Even if you prefer digital delivery, consider whether adding print products could increase your average transaction value. Pricing is not about what you think your time is worth. It's about what the market will pay, what your costs require, and what your financial goals demand. The average hourly rate for professional photographers ranges from $100 to $300 per hour, depending on location and specialty. Calculate your cost of goods sold for each service. Keep COGS under 25% of your package price. Factor in your time for shooting, editing, and client communication. Add overhead allocation for software, insurance, and marketing. Include profit margin, not just break-even. 40% of creatives undercharge due to imposter syndrome and lack of financial clarity. The business plan process forces you to confront the actual math. If your pricing doesn't cover your costs plus profit, you don't have a business. You have an expensive hobby. Marketing to everyone means connecting with no one. Your business plan needs a specific client profile and a realistic acquisition strategy. Your ideal client is not anyone who needs photos. It's a specific person with specific characteristics, demographics, psychographics, budget range, and decision factors. B2B commercial clients have a 40% higher lifetime value than B2C portrait clients due to recurring content needs. If you want predictable revenue, commercial work offers more stability than one-time consumer sessions. SEO leads have a 14.6% close rate, while outbound leads like cold emails have a 1.7% close rate, an 8 times difference in conversion efficiency. Invest in being found rather than chasing. Instagram remains the #1 platform for photographers, with 82% of creative professionals using it for portfolio display. But display is not conversion. Use Instagram for visibility, build your website, and SEO for actual bookings. Marketing expenses should be budgeted at 10 to 15% of projected gross revenue. If you expect to earn $50,000 in your first year, plan to spend $5,000 to $7,500 on marketing. The financial plan is where most photography business plans fail. Photographers skip this section or fill it with wishful thinking. Don't make that mistake. This section determines whether your business survives. The average startup cost for a professional photography business ranges from $10,000 to $15,000, covering gear, legal fees, and initial marketing. Typical categories include camera gear, computer and software, legal formation, insurance, website and branding, and initial marketing. Professional liability insurance costs approximately $500 to $800 annually. This is not optional. One missed deadline or lost memory card could result in a lawsuit that exceeds your annual revenue. Software subscriptions for Adobe Creative Cloud, a CRM like HoneyBook, and gallery hosting average $150 to $250 per month for established photographers. Budget for these from day one. Revenue projection is simple math, but it requires honest inputs. Revenue equals number of bookings multiplied by average booking value. Full-time wedding photographers shoot an average of 20 to 25 weddings per year. If you are starting out, a realistic first-year goal is 5 to 10 weddings at an average of $2,900 per wedding. That's $14,500 to $29,000 in wedding revenue. The median annual income for photographers in the US was $40,760 in May 2025, with the top 10% earning over $86,000. Use these benchmarks to calibrate your expectations. Profit and cash flow are not the same thing. You can be profitable on paper and still run out of money. 82% of small business failures are due to poor cash flow management, not lack of profit. A cash flow forecast tracks when money actually enters and leaves your bank account, not when you earn it or owe it. Commercial clients often pay on net 30 or net 60 terms. Wedding clients typically pay deposits at booking and balances before the event. Photography income is rarely consistent month to month. In the wedding industry, 80% of weddings take place between May and October, creating a significant cash gap from November through April. Set aside 20 to 30% of peak season income for off-season expenses. Financial experts recommend maintaining a cash reserve equal to 3 to 6 months of operating expenses. For a photographer with $3,000 in monthly expenses, that means $9,000 to $18,000 in accessible savings. The average small business has enough cash on hand to survive for 27 days without new revenue. That's not enough. Equipment decisions should follow your business plan, not precede it. Buy what your services require, not what gear reviews recommend. As of 2024, Canon and Sony together hold roughly 3/4 of the interchangeable lens camera market worldwide. Both systems are fully capable of professional work. Choose based on ergonomics and lens ecosystem, not brand loyalty. A dual-slot camera body is non-negotiable for wedding photographers. Shooting a wedding on a single-card slot is gambling with someone's irreplaceable memories. Adobe Creative Cloud, specifically Lightroom and Photoshop, is used by over 80% of creative professionals. This is the industry standard, and client expectations are built around it. Using a CRM can reduce administrative time by 30% through automated workflows. Add AI-powered workflows on top for editing, and you increase productivity up to 10x. Your operations plan describes how work actually gets done, from first inquiry to final delivery. This is where your business plan becomes a workflow. Responding to a lead within 5 minutes increases conversion odds by 9 times compared to responding after 30 minutes. Your workflow needs to account for this. Standard client workflow stages: inquiry, consultation, proposal, booking, pre-session planning, the session, editing, delivery, and follow-up. Industry standard turnaround for wedding gallery delivery is 4 to 6 weeks. Set clear expectations at booking and communicate if timelines shift. Commercial photographers spend approximately 15% of their time shooting and 85% on editing, admin, and marketing. Your schedule needs to reflect this reality. Block shooting days and editing days separately. Build buffer time between sessions. Limit weekend bookings to prevent burnout. The 3-to-1 backup rule: 3 copies of your data on 2 different media types with 1 copy stored off-site. 21% of small businesses lose data due to hardware failure. For photographers, data loss means lost client images, refunds, reputation damage, and potential lawsuits. Backup is not optional. Your business plan needs specific, measurable goals. Vague aspirations don't create accountability. New freelance photographers typically earn between $25,000 and $35,000 in their first full year. Use this as a baseline, adjust it for your market and niche. A realistic booking goal for a first-year wedding photographer is 5 to 10 weddings. That may feel modest, but it's achievable and allows you to refine your process before scaling. Businesses that review their plan monthly grow 30% faster than those that review annually. Build review into your calendar. Compare actual revenue to projected revenue. Review booking numbers versus targets. Check cash flow versus forecast. Assess marketing spend versus results. Identify what's working and what's not. Adjust next month's priorities accordingly. Templates accelerates the process, but they require customization. A generic template produces a generic plan. Standard templates from organizations like Score include 7 core sections with prompts and placeholders. Your job is to replace generic language with specific information about your photography business, market, and goals. The market analysis section requires the most customization. Generic market data doesn't help your price for your specific city or niche. Replace national statistic with local market data. Add median household income for your service area from census data. Include specific competitor analysis for your niche and location. Adjust financial projections for your actual costs and pricing. Score.org provides free SBA-approved business plan templates designed for startups. Start with a free template. If you need more sophisticated financial modeling or guided prompts, upgrade to a paid option. But the free templates are sufficient for most photographers starting out. Knowing what fails is as important as knowing what works. The 3 most damaging mistakes: underestimating costs, targeting vague markets, and pricing that ignores actual expenses. 82% of businesses fail due to cash flow problems, often from underestimated operating costs. Photographers often forget to budget for self-employment tax at 15.3%, leading to year-end debt. Set aside 25 to 30% of every payment for taxes. Marketing to a broad audience results in 50% lower conversion rates than marketing to a defined niche. Specificity is not limiting, it's focusing your limited resources where they produce results. Pricing based on competitors rather than your own costs result in 20 to 30% loss in potential margin. Calculate your costs of goods sold, add operating expenses, factor in time investment, and include profit margin. Then compare to market rates. Don't stop with market rates and hope they cover costs. A business plan is not a one-time document. It's a living tool that evolves with your business. Financial projections should be reviewed quarterly to adjust for actual booking rates versus forecasted rates. Apply inflation adjustments of 3 to 5% annually to pricing models at the start of every fiscal year. Some changes require more than minor adjustments. Seeking new financing or bringing on a partner triggers a mandatory update to legal and financial sections. Revenue streams changing by more than 20% require a full revision. Execution is cited as the #1 challenge for 67% of strategic plans. The plan is not the hard part. Doing the work consistently is the hard part. Break annual goals into quarterly milestones. Break quarterly milestones into weekly tasks. Review progress weekly, adjust monthly. Prioritize revenue-generating activities over optimizations. Automation tools like email sequences and booking calendars can save up to 10 hours per week for solopreneurs. Those hours compound into capacity for more bookings or better work-life balance. Outsourcing editing allows photographers to shoot 30% more sessions per year. The average revenue threshold for hiring a first employee is $150,000 to $200,000. Below that, the overhead usually doesn't make sense. Scaling requires moving from doing the work to managing the work, a shift that 40% of founders struggle to make. If you are tired of scattered effort and inconsistent bookings, join the Elite Success Accelerator. The freemium level gives you immediate access to a starter kit that explains the full visibility system and a 7-day content calendar bonus made specifically for photographers. Link in the description. Subscribe so you don't miss episode 2, and thanks for watching.